Welcome back to Quantum Computing Watch, where each month we map and explain the top strategic events reshaping the landscape of the industry. June 2026 rewrote the rules of the quantum computing race. In just 4 weeks, we watched IBM commit a staggering $10 billion to scale up their hardware, where China's Origin Quantum locked in a $443 million pre-IPO round. We saw Alphabet walk away from the CHIPS Act funding over strategic constraints. Days before its spin-off, Sandbox AQ secured a $500 million federal round from the CHIPS Act. And if that wasn't enough, new U.S. executive orders classified the Harvest Now, Decrypt Later threat model as an active, ongoing national security crisis. Today, we're looking past the geopolitical maneuvering to focus on the single event that fundamentally altered the market landscape this month. Quantinuum's monumental $1.68 billion IPO and its complex, deep-rooted ties to Honeywell. I'm George Geis, and this is a Quantum Computing Market Watch. All right, to set the stage, I'm going to bring out key events in June 2026. And what comes back is a series, a constellation. It's large and complicated, but the large blue nodes, these are the key events of this month, are the ones we're going to concentrate on. For example, here is the U.S. quantum executive orders that we've talked about. The United States restructuring its posture towards quantum computing both offensively and defensively. Here, for example, is the Sandbox AQ securing a $500 million federal award under the CHIPS Act. Here, let's find another large node, is Alphabet. Alphabet rejecting the funding over strategic constraints, formally declining participation in the U.S. government's CHIPS Act, while its spinoff, curiously, Sandbox AQ, accepted funds. Here is IBM committing to deploy more than $10 billion towards quantum computing over the next 5 years, covering CapEx, R&D, manufacturing scale-up, and strategic M&A. Here's the Origin Quantum completing a 3 billion yuan, that's $443 million pre-IPO financing, signaling Beijing's intent to lock in a sovereign independence access across the quantum hardware stack. But here's the event we want to concentrate on. And that is this Quantinuum IPO, this one right here. So let's take a little deeper look at this one and explore some of the issues that came up. On June 3rd, 2026, Quantinuum proved that public market investors are officially ready to underwrite the capital expenditures required for quantum hardware. Operating as a trapped ion pure play, Quantinuum made its Nasdaq debut under the ticker QNT and successfully raised $1.68 billion. The scale of this offering is unprecedented in the pure play quantum sector. They originally set out to raise around $1 billion, but demand allowed them to upsize multiple times, ultimately selling 28 million shares at $60 apiece. At the opening bell, the stock surged to $68, valuing the enterprise at a massive $17.6 billion. But beneath that headline-grabbing valuation is a fascinating and complex financial architecture. If you're investing in Quantinuum, you aren't just buying a standalone quantum company, you're buying into a deeply intertwined relationship with Honeywell. When Quantinuum was formed in 2021 from the merger of Honeywell Quantum Solutions and Cambridge Quantum Computing, Honeywell didn't just spin off its quantum hardware division. They engineered a corporate structure specifically designed to maintain tight strategic and financial control. Following this IPO, Honeywell still retains. It's the principal shareholder of Quantinuum, holding about 48% of the combined voting power. Now let's talk a little bit about that control. So let me select Quantinuum, and I'm going to bring out its investors. These are some of investors. Pre-IPO, you'll see, for example, yes, here's NVIDIA invested. Amgen, the biotech company, invested. And let's see, here is JP Morgan, very active in the quantum space. But here is Honeywell. Honeywell Technologies. Now, let's explore this relationship and talk about its control in a little bit more detail. Here's how Honeywell structured the relationship. The IPO used what's called an Up-C structure. This is common in spin-offs, but it's critical for investors to understand. When you buy Class A shares of Quantinuum Inc. in the open market, you are actually buying into a newly formed holding company. And that holding company only materials asset is a 12% minority economic interest in the underlying operating entity. The remaining 88% belongs to the pre-IPO insiders, dominated by Honeywell. With only about 12% of the shares publicly traded and insiders bound by a 180-day lockup, this constraint could drive serious stock volatility in Quantinuum. And a critical piece of the puzzle is what is called a tax receivable agreement, or TRA. This is designed to create corporate tax savings when pre-IPO holders exchange their units for Class A shares. The catch: Quantinuum is contractually obligated to pay 85% of those cash tax savings right back to Honeywell and other investors. This means that as Quantinuum scales and turns a profit, if it does, an estimated $3 billion in future cash flows over the next 25 years won't go into areas such as quantum research. It will flow back directly to Honeywell Technologies and other insiders. But the interdependence between Quantinuum and Honeywell goes beyond the balance sheets. It's built into the hardware itself. Quantinuum's 8 series quantum computers rely on a unique QCCD, quantum charge coupled device architecture, that is trapping individual icons and trapping icons in a vacuum and shuttling them around with lasers requires extreme, uncompromising precision. All right, so what I want to do now is select Quantinuum and bring out its supplier. And curious, you'll see back, it's another Honeywell company that comes out. And let's talk about this. This is Honeywell Aerospace, operating as an independent public company following its June 2026 spinoff. Honeywell Aerospace provides Quantinuum with a major competitive moat, a specialized ion trap supply chain. Through a 10-year strategic agreement, these traps are manufactured at a highly specialized foundry in Plymouth, Minnesota, a facility with years of history producing radiation-hardened microelectronics for NASA missions, including Mars rovers. Quantinuum's trapped ion chips have to withstand ultra-high vacuums and cryogenic temperatures of 10 to 20 Kelvin, just slightly above absolute zero. By leveraging Honeywell's aerospace world-class manufacturing, Quantinuum can suspend and manipulate qubits just microns above the chip. The best part for Quantinuum investors in this supply relationship, under this agreement, Honeywell Aerospace is prohibited from selling these ion traps to other quantum computing competitors for 6 years. Quantinuum, meanwhile, is free to shop around. It's a captive supply chain that their competitors simply do not have. Finally, Honeywell isn't just controlling shareholder and supplier. They're an active paying anchor customer. They're providing real-world validation and real-world revenue for Quantinuum software in two large industries. So let me stop here and bring out this relationship between Honeywell Technologies and Quantinuum, and I'll expand this as a customer relationship. So notice this is again, very complex relationship between two Honeywell companies, Honeywell Technologies and Honeywell Aerospace, but the customer is Honeywell Technologies. And in two areas. In computational chemistry, Honeywell's Performance Materials division uses Quantinuum's InQuanto platform to simulate complex molecular interactions, specifically to accelerate the development of new eco-friendly refrigerants. Secondly, industrial cybersecurity. Quantinuum's quantum origin uses the inherent randomness of quantum mechanics to generate unbreakable cryptographic keys. Honeywell is actively integrating this encryption into its commercial infrastructure products, like smart utility meters and building control systems. So what happens next? The $1.68 billion IPO injection will be deployed to scale Quantinuum's trapped ion hardware, target integrated photonics, boost qubit counts, and likely fund M&A across the supply chain. And they're going to need every penny, with IBM dropping $10 billion to defend its superconducting supremacy, and China heavily backing Origin Quantum. Quantinuum needs both this IPO war chest and the relentless engineering support of Honeywell to compete. It's this unique duality, however, a nimble, heavily backed, public pure play tethered to the industrial engines of now two Honeywell companies, that makes Quantinuum a formidable yet structurally complex player. Here we have it. June 2026 continued to prove that quantum computing is no longer a speculative science project. It's a high-stakes, multi-billion-dollar commercial battlefield. And Quantinuum's historic IPO is the clear bellwether in June 2026. Thanks for viewing this episode of Quantum Computing Watch. We'll see you next month.